Everyone. My name is DK, for those who don't know me, head of investor relations for DeFi Dev Corp. We're going to get started right away. It's joining me today, the Gigabrain Trust of DFDV, Parker White, COO and CIO, and Joseph Onorati, our CEO. It's been a lot of news from DFDV over the last few weeks, capital raise, guidance, our business updates. We wanted to get on here and answer some of the top questions you guys all had. Before we begin, a quick note, today's conversation may include forward-looking statements. These involve risks and uncertainties that could cause actual results to differ materially. For further discussion of those risks, please refer to our most recent Form 8K filed and other filings with the SEC. We don't undertake any obligation to update these forward-looking statements. Parker, Joseph, thanks for joining.
Great, thanks.
Howdy.
Yeah, let's start with the convertible note. There was only so much we could actually discuss on our business update call on this since the note hadn't closed. So maybe just a 101, what's the structure? How much we raised, why use a prepaid forward here, maybe some of the pros and cons of using this exact structure. Parker, maybe you can kick us off with that.
Sure. Yeah, so I'm going to be kind of shooting from the hip here, so my numbers might be off by $1 million or $2 million. Maybe DK can correct me if I'm wrong on some of the amounts, but essentially, so we did it was 112 million on the convert, and then what's called a green shoe, kind of a fun story that I learned about. But back in the 60s, company did this first structure, and it was like the green shoe manufacturing company or whatever. So now for the last 60 years, people have been calling it the green shoe, but it's like some extra bonds that you can sell. So anyways, we did an extra 10 million on that, bringing the total to it was 122 on the convert.
122.5. So you get passing grade right there for the rounding.
All right, close. So then what we did is a decent chunk of the proceeds went towards what's called a prepaid forward. And so the way these converts typically work is it's hedge fund buyers, and they don't want to take an outright position. They don't want to just bet on DFDV going to the moon. And so they will, they go out and short the stock. Unfortunately, with our stock, as many of you guys I'm sure are aware and hopefully taking advantage of, our stock is very hard to borrow, and therefore the borrow rate is super high. So if you loan out shares, borrow rate's coming down, but if you loan out your shares of DFDV to people to short, you're going to be making like 100%, or maybe now it's like 80% annualized, which is pretty nice just to hold. But if you're trying to short, that's a very expensive borrow rate. So what we did is we provided a synthetic short facility to these guys, which basically puts us long the stock, the prepaid forward. So we were essentially buying the stock at 22, 23, or 21, whatever the price was when we closed the deal. And we think long term that's a pretty good investment. We're going to be continuing to raise money, continuing to grow our balance sheet, but ultimately it was kind of what was needed to get this convertible raise done. So the prepaid forward, I believe it was 76 million that we put up on that one. And then the remainder of the 122, there were some fees in there, but then the remainder went to the treasury that we could use to accumulate more SOL. So why did we do the convert now versus later, and maybe when the borrow had come in some? Couple reasons. One, we think it's very important to kind of quote unquote institutionalize. So a lot of bigger institutions want to see that you've worked with some bigger banks that do a lot of due diligence. So what's interesting is that a lot of the big hedge funds and just big buyers out there, we talked to names like Voya and Lazard and some other big institutional long only buyers. A lot of these guys don't actually do a lot of due diligence themselves. And so the due diligence rigor that we went through with Cantor Fitzgerald was pretty significant. And so these guys, these institutional guys, rely on the banks to do a lot of the due diligence. And so doing a very standard 144A convert, very similar to MicroStrategy, actually exactly the same as MicroStrategy in most regards, with a deep, pretty respected bank, Cantor Fitzgerald, that helped us really kind of institutionalize and provided some credibility to what we're doing. The last thing or last reason to do it is it gets us, quote unquote, onto the playing field. So now if you look on Bloomberg or, TradeWeb or wherever you can see these bonds trading OTC, our bonds are trading every single day and there's a price there. And the bonds have traded up since the fundraise. They're trading at, 103, 104, whatever. We sold them at par, so at 100. So that's really helpful. So for institutional buyers that are looking at the stock, now there's another market they can look at, the convert market. If we do, or when we do future converts, those bonds now become a reference price. So it helps us to price our volatility. It helps us to price the credit risk and the credit spread. It's helpful for so many reasons. And so in some ways, it was kind of like a bond IPO in a sense, in that now there's a price out there. Now people can value a whole bunch of aspects of our capital structure. And so again, just beneficial in so many ways, over and above the capital that we got to buy more SOL.
Yeah, helpful overview. Joseph, anything you'd add to that?
Well, I was looking for stuff to add, but I think you crushed it.
Yeah, I will. I will actually add a couple things here. So, I think the terms are also really important to emphasize here. We chose unsecured, long-dated terms deliberately. So none of our SOL is put up as collateral. It's a 5-year note. There's no near-term maturity cliff. So, if you enter some environment in the next year or two where Solana drops 80%, it could stay there for, call it the next 4 years and we would be fine. And you contrast that with secured short-term paper at steep discounts, which can work in a bull market, but is inherently a bit more fragile. And I would say, to the extent you're doing it at a discount actually results in share dilution. One thing that I thought was pretty cool was we priced the strike on these converts at 23.11. It was a premium at the time that we raised, already in the money, but on a pre-money basis at the time, it represented somewhere around a 3.5x NAV based off of our SOL balance pre-raise. Maybe like I think the highest priced convert for a treasure company ever. It's not even a level that MicroStrategy has ever done before. So I think from that standpoint, we're obviously pretty happy with that.
Yeah, the investors for this are all qualified institutional buyers, funds with over $100 million in assets. I mean, these are serious Wall Street funds that participated in the convert even at that pricing. Yeah, a lot of it was hedged, so maybe that is like less important to them, but none of the investors were completely hedged via the pre-funded forward.
Yeah, and I guess I'll just add, like, some of these guys that wrote checks, some of them are some pretty big checks. But a lot of these guys were like nibbling, right? So this is their first deal. But if you look at the MicroStrategy deals, investors come back over and over and over again. And so with the bonds trading up, hopefully that, these guys are pretty happy. And whenever we do the next one, they'll be back and they'll be back in more size. And there were a bunch of guys around the table that, we did calls with and ultimately said, hey, we want to sit this one out, but like we're following the story. And so I think we probably had 50 or 60 calls spread across a couple days with these institutional guys. So all the guys that do the MicroStrategy deals, we talked to all of them. We told the story. We pumped Solana. We talked about Solana quite a bit on a lot of these calls, but these guys will now be back. They're following the stock. And it just, every time you go back to them, it becomes easier and easier to get first checks and then get larger checks after those first ones. So lots of positives.
All right, moving right on to the next one. This next question I had come into my inbox. And by the way, guys, to the extent you guys have questions, of course, you can raise hand or post on X or shoot me an email at dk at defidevcorp.com. Always happy to take them. So there's been a lot of questions around the ELOC. Parker, maybe just clarify for folks again what this is, how much we've drawn. Obviously, we have not disclosed that, but how we sort of think about using it, and why maybe we hadn't drawn from it a bit sooner.
Yeah, good question. So the ELOC, and I've said this in a few places, it's essentially like an ATM. It effectively is an ATM. So what it does is allows us to call up the trader on, let's say a Tuesday and say, hey, we want to sell X number of shares on a Wednesday, tomorrow. And then we deliver them those shares before the market open, and then they sell those shares throughout the day. And there's a pricing formula. So we use the TWAP, so time weighted average price. And throughout the day, so if the time weighted average price is, $23 and we sold, I don't know, 10,000 shares, then, that's $230,000 that we sold. And then they wire that money to our bank the next day. So that's like operationally how it works. The TWAP, they do get a little bit of a discount off the TWAP. And so, they're not just selling it, like the trader is getting a little money in there as well, but it's not too bad. And it allows us to kind of put shares into the market on a daily basis or weekly basis or whatever cadence we want to do. Very similar to an ATM, and it just helps us to continuously raise capital. In terms of how much we've tapped, I'll say we have used it, but we haven't disclosed how much. We probably will get into a cadence of disclosing how much we use it on some interval, but we haven't done that yet. So just for, to avoid jail and for fairness, we'll disclose that broadly and more publicly whenever we go out to do that. And then was there one more question?
It was more why we haven't tapped it sooner. If you could maybe speak a little bit to the timing around the raise.
Yeah. So unfortunately, we are not able to use the ELOC, and actually, MicroStrategy is not able to use their ATM. So it's a very similar situation. I'm sure y'all are familiar. Whenever they're raising capital in another form. So when we have what's called MNPI, material non-public information, we know something that the market doesn't know, and so we aren't supposed to be selling stock when we have information that the rest of the market doesn't. Material information,
Even
big
if we
news. Hey,
think
we're
it's
about to.
actually bullish.
Yeah, even if we think it's actually bullish and we'd be selling, which is like, we shouldn't be selling, but doesn't matter. SEC doesn't care. It's like, oh, you have information, you can't be doing anything with stock. And so once we kind of, a couple days before the fundraising even starts, we really should be entering a quiet period and stop running the ELOC or the ATM in MicroStrategy's case. And then certainly while we're fundraising, we can't be running it. So, the con of doing a bigger fundraise like a convert is we kind of got to pause on that ELOC and, sit tight.
This is maybe not directly related to the ELOC, but one thing that I don't know, maybe everybody else knows this, but I, as a first-time public company executive, think this is interesting. The fundraising in the public markets is really quick. Like it's measured in just a handful of days. So the convert, for example, there's a wall crossing process where investors agree to receive material non-public information and therefore not trade the stock until the information becomes public or the wall cross expires. Like the information's not going to become public, so it's not going to move the market ever. And these periods can be really short. Like I don't remember exactly how long it was for the convert now, but it's like, okay, the company has like 2 days to talk to investors, and then the fundraise gets priced, and then it flips public, and there's like really 2 hours of kind of working time when investors who didn't wall cross get access to the deal because the deal kind of becomes public, and then they can contact the bank to participate. But these things are really fast. It's not like private market venture fundraising where a company could be fundraising for like 6 months or whatever before they're able to close their round. But it's also not like a TGE kind of event where maybe the token sells out in like an ICO in 12 minutes or something. But it's very quick.
Yeah, and I think to my earlier point on the bank doing your due diligence, this is kind of what drives a lot of that, and that is, Cantor will call investors on a regular basis on different deals here and there, and the more investors make money every time they pick up the phone when Cantor calls, the more likely they're going to pick up the phone again. And so these investors actually rely on the banks a lot, who can do all that due diligence for weeks leading up to the deal. And then the investors are trusting the bank that this is going to be a good deal and they're going to make money on the deal. And so when you can get a larger, more respected bank like a Cantor to do a deal, that's a great sign to the market. And then when the deal trades up, obviously that positive feedback loop keeps going. So this is kind of why these deals can come together in 2 or 3 days, and that's because a lot of these investors just trust Cantor, and so Cantor's like, "Hey, here's a structure of the deal. It's a good deal. You should do it." A lot of them just say, "Yep, sounds good. Where do I send the money?" And that's kind of how it comes together, which is pretty cool.
All right, moving along because we've only got 12 minutes here. So on the discussion actually of MNAV, we have one question that asks about the MNAV views that we now have on our website. Can you discuss what this is, why you disclose MNAV across 4 different views, and why you decided to disclose this? Parker, Joseph, if you don't mind, I will take this one. So I
Please.
actually think this is probably the most transparent view in MNAV that you will see out there among different crypto treasury companies. You know, there are a lot of teams that will obviously just look at, call it like equity to crypto value, whether it's Bitcoin or in our case, Sol. And that's a common view. That's view one. I think it's a view that we had for a long time. But there are others that will look at it in a bunch of different slices. So what we wanted to do was present all those different slices so that you could have a very holistic view of net asset value across different scenarios, but then also see based on where the structure is today, what the fully diluted share count is. So in scenario 2, for example, and for those who don't know what I'm talking about, please go to our website, dfdv.com or defidevcorp.com. You'll see a NAV and SPS tab that you can look at that has these scenarios. So if you wanted to look at, not just equity to Sol, but equity to, call it Sol less any outstanding debt, there's a view that we have there as well. But then there's also the impact of the debt going away. Why? Because we've got convertible debt in our cap stack, and the extent that the share price exceeds the strike price and those holders decide to convert, the debt goes away. So we had a lot of folks going and asking, well, what happens if the debt goes away? What's the dilution impact there? And that's really the third view that we have on our site. So you can see, in a scenario where, everything's in the money and all the convert holders decided to, in theory, convert to equity, what the dilution impact is. And then the final view here is what I call the fully diluted adjusted NAV and the fully diluted share count, which is when the share price exceeds the strike levels on not just the converts, but also the warrants that were attached to our first fundraise. And really, um, I think that fully diluted number for now, you should more or less think of as the quote unquote ceiling with an asterisk. I'll return to that in a second. And that if the warrants convert, the ordinary share count would obviously increase, but that diluted number would stay the same. And now we're going to return to the asterisk, which is to say, to the extent that we run the ELOC, that number obviously goes up. That's obviously new share issuances going to the market. But remember, our goal is to run the ELOC only when we trade at a premium that we deem appropriate to net asset value. So that means that SOL per share growth will outpace share issuance growth. And the example I've been giving folks is if you look at our fully diluted shares since May 6th, remember to adjust for um, the 1-to-7 forward split, our fully diluted shares have gone up 13% since May 6th, but our SOL per share has gone up 61%. And then even if you looked at an ordinary share count, ordinary shares are up 33% in that time period, but SOL per share is up 61%. I highlight this, I'm sorry for going on the monologue here, because I think there are very few competitors in the market that can make the same statement on a fully diluted basis. Because I think the conventional wisdom right now is to raise as close to NAV as possible, but that does lead to lower crypto per share growth. So I think this view like really lets investors stress test the dilution themselves, and obviously holds us accountable to make sure that we're raising capital very efficiently. So I'm pretty happy with this view, and we're gonna keep disclosing it. All right, next question. This one's very relevant topic. Let's talk about guidance. You put a public stake in the ground with the 0.165 SOL per share target for by end of June 2026 and 1 SOL per share by December 2028. What made you decide to issue formal guidance now, and how did you arrive at those specific numbers? Joseph, you maybe want to take that one?
I was hoping you'd take that one too, since, you were a key contributor to the model.
I am happy to. So look, it's the first time we've offered forward-looking SOL per share targets. I think it's the first time we've gotten uh, a metric, or I'm going to say guidance on a metric like this from any non-Bitcoin vehicle. And we felt like it was the right time because the model, in our view, is proving itself. We've raised over 200 million in roughly the 3 months since the change of control of Janover, and we now have, at least I think, clarity on capital access via accomplishing our convert raise. The ELOC is effective, and of course, we're contemplating other methods of capital raising as well. But I think that ultimately let us forecast with a lot of confidence. And as we emphasize in the blog post, and for those who haven't read, I highly suggest you do. We anchor this in what I think are really objective and observable measures, like our median average daily volume to market cap in the second quarter, and how that compares to other crypto treasury companies, and of course, how much MicroStrategy has raised on a monthly basis relative to their market cap. And well, what I'll say is we wanted to get a view out there that was our best view of what we could accomplish if we do this right. I don't think any of us here are trying to sandbag guidance. This is our best guess as of the date that we issued it. And we ascribe to the view that our investors should be given as much info as we can, frankly, feasibly give them. And you can all hold us accountable to this, obviously, over the next 12 months and over the next 3 years. Parker, anything you would add to that?
Yeah. Another contributing factor on why is candidly we had a good long chat with Michael Saylor, and he looked at the stock and he was like, you guys should do, he said we should do a couple things. I won't reveal all the secrets, but one of them was you guys should release guidance. You should tell the market where you think you can go reasonably, of course, factor in some downside scenarios, some upside scenarios. And then you should update that on a regular basis. And so I think he's right. And I think from a clarity standpoint, we should be getting out there. I guess one other point to add is we modeled in volatility, right? So SOL can go up, and that certainly helps and would probably accelerate things. SOL can go down some. And I think we could still probably hit the target with some downside move on SOL. So this was not a super bullish, if everything goes right, we're gonna be able to hit that number. This was a pretty reasonable forecast based on a lot of discussions from a team or between a team that has spent, I don't know, Joseph, how many bear markets have you been through now? Like 4 or 5, like all of them?
Yeah, pretty well. No, there was one before my time. But yeah, I'd say
The
4.
Satoshi 2010 one.
Yeah.
One before my
So,
time. Makes you sound so old, Joseph.
Oh dear.
All right, guys. I will leave us with a closing question here. This one came in my inbox, which is, what should investors be watching over the next few months? What are you guys most excited about? And I guess we will try to answer this as best as we can over here. I'll kick us off, and then if you guys have anything else to add, feel free to go ahead. We obviously have guidance out there. We are obviously doing everything we can to progress towards that. And we've got some cool graphics on our site that show SPS over time that I think you guys can go and take a look at as well. Uh, Personally, I think one thing I've been pounding the table a lot for investors is looking at our growth in, um, validator and staking revenue. We'll have our first disclosure when we report earnings, and that's really the revenue impact from our first party treasury growing as well as third party delegated stake. And the last piece is just evolving the MSTR playbook. I think again, everyone has sort of come out and recent months and said we are MSTR for ETH or MSTR for hype or whatever it is, right? And they're largely copy pasting the playbook. It's a good one, right? It works for a reason. But I think if you stop there, you're not living up to your max potential as a crypto treasury company. So those are some of the things that I at least would highlight. Let Parker or Joseph chime in with anything else.
Um, yeah, on my side, I'm pretty excited. Well, stay tuned. There's some other stuff that we can't share just yet, but we'll be press releasing pretty soon that we're pretty excited about. So stay tuned for that. But I think the other area that I'm really excited about, and I know Joseph is probably even more amped, is really ultimately our mission of being this bridge between TradFi and DeFi. So seeing our stock DFDVX trading on chain 24/7, 365, it's got perps on it. Some of the other X stocks are now added on Camino as a collateral asset. Hopefully DFDV is being added very soon there. But like, it's so cool the crossover and that bridge strengthening and us helping to build that bridge. So seeing real world assets trading on chain. And I think what that's going to ultimately result in is that the Solana markets for these things become the anchor markets because ultimately capital flows where it's most free and it's most free on chain. There's no KYC restrictions, there's no time restrictions, that the thing never goes down. And so I am super excited for a day when the reference price for, say, a CME derivative on our stock is actually an on-chain Oracle instead of the NASDAQ. And so that's an area that I think is going to take longer to develop, but very, very exciting nonetheless. And, it's ultimately why we're here.
Yeah, I was so excited when this happened. So I was hanging out with a bunch of my family at the time, and we just closed or maybe we just priced the convert, and I'm going around like, oh my gosh, DFDVX is on Orca, and there's like $500 in this pool, and I'm like showing people my laptop, dude, check this out, this is so cool, the stock's like live on chain and it's trading, and they're like, didn't you just do like $100 million convert? Like that says $500. I'm like, this is what we're here for.
Oh
Yeah,
man.
so cool.
All right, guys. Yeah, I guess the only thing I'd add is also looking forward to more direct communication like this, more spaces, more transparency, more telling the story of Solana. I think that's going to be a big point of emphasis for us as well. So, anyway, thanks all for joining us. Spaces was recorded, will be posted. Please be on lookout for more content from us. And if there's anything in particular you want to hear more of, any questions, again, please don't hesitate to reach out to us. We love communicating with all of you guys directly. And with that, in service of Soul per share, we will see you next time.
So yeah.
Bye. Thank you.